So we had that crash last Monday. The Bloody Monday, I called it. I was tweeting like my butt off, but there was something called the yen carry trade, and I talked about actually on the last Power Hour about it, but I didn't have these graphs because Chris was on vacation. So, all right. So, what is the yen carry trade? Okay, let's understand that. Let's go quickly. If you guys missed last week's, please go watch Power Hour. I talked quite a bit about it. So there's different currencies around the world, as we know. There's euros, there's yens, there's drachmas. Drachmas. There is the ruble and the obviously the US dollar, right? The New Zealand dollar, Canadian dollar, Australian dollar. There's many different currencies that people use, right, in their countries. So US dollar obviously is the top currency, the top dog when it comes to currencies, right? It's the reserve currency of the world. Although a lot of the BRICS petrodollars don't exist anymore. The Saudis are looking to trade in their own currencies. With the yuans, Chinese yuan, and so there's some shift happening, but I don't think the US dollar is going to lose its reserve currency status. If it does, we're in deep trouble. Okay, I doubt that it will, though. So what happened is that we have the Japanese yen on one end, and we have the US dollar on one end. So not only there's different currencies, but there's different interest rates that are set in these countries. The Japanese had a deflation problem, and they had zero interest rates for the last 25 years, 30 years. Tried to bring their economy out of the hole that it's in. Okay. So when the Japanese interest rates are at zero, and we had ZIRP as well, but then what did the Federal Reserve do? The Federal Reserve increased the US rates to 5%, short-term rates. Japanese were still zero. Now we have zero and we have 5, right? So what do a lot of the hedge funds and private equity, and this includes a lot of people around the world, this is not just US, right? What do? What can you do? If you can, obviously. You have to have the mechanisms to do it. So what you do is you go, first of all, to borrow in Japan. You borrow in Japan, right, with Japanese yens. You can't borrow in US dollars. So there has to be this currency exchange, and that's the exchange rate, okay? Under the assumption that the exchange rate stays stable, which it has been, okay? In fact, the US dollar has gained due to the reason that we're raising rates and the Japanese are keeping it at zero. If you look at a Japanese US dollar exchange rate, US dollar has been gaining against the Japanese yen for the last 3 years, 2.5, 3 years. If you look at that chart, it's steadily gaining value against the Japanese yen. Okay, so what do? We go exchange our currency into Japanese yen. We go to Japanese banks or the government or their Federal Reserve. We borrow at zero interest rates. Okay. Now, then we go back to the US, and then maybe we can buy a treasury bill with that at 5%. So we're automatically, that's called the carry trade. We're carrying a trade that's dependent on 3 things. 1, exchange rate between the US dollar and the Japanese yen. 2, the difference between interest rates in 2 countries. This was being done, by the way, by a lot of different people all over the world, right? And then that's what it was called the carry trade, right? Well, what happened is that this carry trade is into the trillions and trillions of dollars, okay? So before the flash crash that we had, now that I can call it a flash crash because we have come back, what happened is that the Japanese government, in their wisdom, after keeping the rates at zero for the last forever, they decided to increase the rates from 0 to 0.5%. Okay? Think about this now. At the same time, there is talk that we're going to cut the rates. So what is happening now that spread is kind of coming closer, right? Again, 0.5% is nothing to talk about. But if we start cutting rates and Japanese start increasing rates, so that 5% middle is not there anymore. It's shrinking. That's 1. 2, the effect on the Japanese yen gaining against the US dollar was in such a nosebleed fashion. Literally, in a matter of 2 weeks, the Japanese yen gained close to 12% on the US dollar. Now, you guys got to think about this now. As I said, this transaction can only be done by exchanging your US dollars to Japanese yen and converting it back again to bring it home, right? So if you did this carry trade and you borrowed at 0 and invested at 5, but now your currency exchange lost you 12%, you're in a hole by 7%. And most of this carry trade, by the way, was done to buy the Mag 7, the equities, okay? So, well, now the currency risk is coming into play, because now when I exchange my US dollars to Japanese yen to do this trade, okay, everything was fine because it's stable. In fact, US dollar was gaining. I was fine. But then once I did this, I just lost on the exchange back to the US dollars 12%. Well, now I'm in toast. And these people do it with massive leverage, okay? So what happened? A lot of that got unwound, and that's why we had the flash crash. So how large is the yen carry trade? On Monday, global markets experienced significant losses due to growing fears that the yen carry trade is unwinding. Yes, and I'm going to show you guys a chart, and you guys will see what the correlation is between the carry trade and the US equities. According to Deutsche Bank, massive conglomerate in Germany, the yen carry trade amounts to a whopping $20 trillion. Think about this, people. Okay, this is what happens when the governments print money around the world and then put it into the economy. Well, that money chases return, and these are the risky things that they do, which will affect everybody's. Like, it will affect my 401k if the market tanks. Or 505% of Japanese GDP based on Japan's government balance sheet assets. Other estimates, they use Japanese banks' foreign lending data from the Bank of International Settlement show that it is $1 trillion. So the other thing that happened is that they were doing the same thing, the Japanese investors, right? They were borrowing in their own country, exchanging it to US dollars, coming here and buying stocks. The Japanese investors' net international investment, which size has grown to 3.4 trillion in Q1 of 2024. So they borrowed, the Japanese hedge funds and banks borrowed in their own country, came to the US and bought the Mag 7 or bought treasuries, right? The yen carry trade is massive, and that was the reason. Now, my opinion, is it over? No, I don't think it is over yet. I think, and then, it's kind of a feint, but you guys need to pay attention to this chart. There is, like, I drew a long rectangular box on top of the chart, okay? Look where we had trouble when the Japanese carry trade, and the white bars, by the way, is the size of the Japanese carry trade, and superimposed on the white bars is a yellow line. It's kind of faint, but you guys will, maybe watch it later carefully. That's the equity market. That's the S&P 500, right? So every time that carry trade gets up close to the yellow, the red rectangular box I drew up there, what happens to the stock market? And it's when it starts getting unwounded, the market eats it, absolutely eats it, right? So, and look where we are now as of last week and last month. Look, we're inside the red box now. And you guys can see what has happened with the yellow line going literally straight up. But the correlation is uncanny. You guys need to start paying attention to this. See, these are the things you guys are learning here, that it wasn't in your thought process. What is the Japanese carry trade, and how does it affect my stock or in my Nvidia or my Apple? Well, that's how it is right there. So the first shot across the bow was Japanese carry trade. Part of it is being unwound. If it's $20 trillion, it's massive. I mean, we're looking some pain here, and we're looking some massive volatility coming up. So decades of the Bank of Japan's monetary policy easing created massive distortions in financial markets. 100% agree. And in fact, the reason that bloodbath ended was the Japanese Federal Reserve chairman said, we're not going to raise rates anymore, because what happened is that they raised the rates. The Japanese yen gained 12% on the US dollar. The carry trade started getting unwound, and they figured, holy crap, we shouldn't have done that, but then they did. Are they going to continue doing it? Well, time will tell, but the carry trade has a massive direct correlation between what happens in our stock markets. So that's the Japanese carry trade.